Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top author on TradingView for many years, as well as being one of the only traders with a fully verified MyFX book track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump right into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about USDJPY. First, I'll give you the technical aspect, then I'll move to the commitment of traders analysis to see what the non-commercials, so the smart money in the market, are doing and how they are moving and shifting their orders. And then I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing and rejecting to the upside a quite strong historical monthly demand and support zone. From here, all these previous rejections to the upside were created. And right now, what we can see is that the market has tested again the exact same zone and has already started rejecting it to the upside. So in a situation like this, more bullish price action could be expected away from this area, as already happened in the past when the market was testing and rejecting this exact same zone. And the rejection to the upside is also fueled by strong institutional buying. And we will be speaking about that in just a few moments when we move to the commitment of traders analysis. For now, let's keep all of this in mind and drop that on the weekly time frame. Now, from a weekly perspective, we can notice a perfect inversion of trend and structure. In fact, we can see how the market was moving with the creation of weekly lower lows and lower highs. Then the market created this triple bottom at this zone, which, by the way, this triple bottom zone is also the demand and support that we have just identified on the monthly. So 3 times the market tried going lower, failed, and after that the market inverted to the creation of higher highs and higher lows. So this is a perfect inversion of trend from lower lows and lower highs, triple bottom, higher highs and higher lows. Now, if we are to identify the structure that the market has broken, it is exactly already marked here. I had it already marked from my previous analysis. And this is the previous support, turned resistance all across that zone, which then became again support. It was acting as previous support here, turned resistance here, now again support all across this zone. The market tested the area and is currently in the process of rejecting it to the upside. Just a quick interruption. Let me know in the comments below any new pairs or topics that you would like me to cover in my next videos, because I'm always open to suggestions. Dropping down on the daily, what do we see? Now, here in the daily time frame, what we had was a clear range. The market then broke above the range, as we can see right here. And after the break, what you would expect is a retest and a continuation to the upside. Now, in this case, the retest came also with a stop loss hunt, because as we know, after the breakout from a range, most retail traders start buying and their stop losses are usually below the low. Now, the low in this case is exactly right here. And in this case, what happened is the market dropped, hunted all those stop losses, and then the continuation to the upside really started. And this is a classic behavior, because when it comes to the markets in general, there is a lot of manipulation because big orders need liquidity in order to be executed, because for every buyer, there needs to be a seller. For every seller, there needs to be a buyer. If there isn't enough liquidity in the market to actually buy, let's say institutions want to buy and they don't have enough sellers, if they trigger all those stop losses, the stop loss orders become the sellers. So at that point, they can actually fully load up and the push to the upside can really start. So here in the daily, we now have the breakout, clear impulse to the upside. The next logical step after an impulse is to see the correction and then continuation to the upside. Now, if we move to the commitment of traders analysis and look at the data for the JPY, we can see that institutions have been shorting the JPY aggressively. We went from having 179K net positions, so quite aggressively positioned to the bullish side for the JPY, which means bearish side for USDJPY, because if institutions are longing the JPY, they're making USDJPY weaker, obviously. And now we're seeing the complete opposite. So institutions are shorting the JPY, therefore making USDJPY stronger because they have been decreasing their net positions all the way down to 79K and increasing their shorts to 96K with only 176K longs. So clearly institutions are longing USDJPY by shorting the JPY. Let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description so you never miss new updates. Now back to the analysis. So as we were saying, since institutions are longing USDJPY, it comes as no surprise that the market has been moving higher, fueled by the institutional buying of this pair. So if from here we will have a correction, if you want to measure a correction, you have to take your Fibonacci from the low to the high of the impulse leg, which in this case shows us how we have a 0.32 and 50% retracement at the moment lining up around this zone. And if the market would correct to this area, things would get very interesting because inside of this zone, there is a good probability of seeing more institutional buying, further increasing the probabilities of a potential rejection to the upside away from this level. So if the market will correct to this zone, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education, and I will see you in my next video.